The United States has the strongest and most trusted capital markets in the world, and that didn't happen by accident. It happened because we have a system that relies on clear rules, reliable disclosures, and enforcement that is predictable and grounded in law. This is near and dear to my heart as I worked in a regulated industry. Fair and transparent regulations allow our country to have the most transparent liquid markets in the world. And those standards are even more important in a time of strategic competition, especially when we're talking about Communist China. Communist China is not an ordinary foreign market participant. They are the biggest existential threat to our country, largest external threat to our country. They are a strategic competitor with a state-directed economy. Communist China operates with no transparency, imposes restrictions that prevent U.S. regulators from having the same inspection and enforcement access that we would expect here at home. And despite existing law requiring foreign firms to open up their audits for our inspectors, Chinese companies have been shielding their books and used auditors under their control to provide dishonest information and withhold data. All the while, we cannot audit Chinese companies directly to get to the bottom of the truth. And we have not taken action to delist non-compliant Chinese companies from our stock exchange because of this. This topic up because there's about 286 Chinese companies that are listed on our exchanges as of March of last year. 151 of them are these variable interest entities, VIEs, and they have the arrangement you're talking about, or taking advantage rather of the arrangement you're talking about. And they represent over $1 trillion. That's $1 trillion of American citizens' savings that are going into these firms. And they use these structures because Chinese law restricts foreign ownership in key sectors, so they can't sell the equity in operating companies directly to U.S. investors. So they set up these companies, as you said, say up in the Cayman Islands or whatever it is, and instead investors buy shares in an offshore holding company that relies on these contracts, but not ownership, to have economic interest in the business.